Welcome to the Deep Dive. Today we are strapping in for a high-octane analysis of a company that is, well, no longer content to be the challenger, AMD. We're diving deep into the massive, really aggressive strategy they laid out during their 2025 Financial Analyst Day, or FAD, where they didn't just update their targets. I mean, they fundamentally redefined their entire market vision.
It's absolutely a pivotal moment. A financial analyst day, for those who aren't familiar, it's basically a high-level strategy session for investors.
Right.
It's where a company lays out its long-term roadmaps, its financial targets, sometimes years and years into the future. And this one, their first major FAD since 2022 was a declaration.
A declaration of what?
That AMD sees itself as leading, not following, the next era of high performance and, of course, AI computing.
The numbers they put forward are. They're designed to shock you, to make you pay attention.
Yeah.
When we're talking about ambition, we mean massive top-tier ambition.
Oh, absolutely.
AMD is projecting a revenue compound annual growth rate, or AKGR, of greater than 35% over the next 3 to 5 years.
35%, that's just industry-leading growth.
And they're justifying this by claiming the total addressable market, the TAM, that they're competing for, will hit a staggering $1 trillion by 2030.
$1 trillion. So our mission today is pretty straightforward. We need to pull apart the sources and really understand this extraordinary claim. How do they move from being a strong competitor to projecting, best-in-class growth?
Right. What's the path?
Exactly. We need to unpack their current business momentum, analyze why that TAM suddenly ballooned to $1 trillion, and really examine the critical, super aggressive AI hardware and software roadmaps.
And see if they can actually hit those financial targets, like that non-GAAP EPS target of over $20.
That's the one. It's a packed roadmap.
It really is. So let's start at the beginning, with the foundation. The launch pad that gave them the confidence to even launch this trillion-dollar vision in the first place. Before you can project a 35% CAGR, you need a track record. You need to show you can execute.
Absolutely.
And AMD's strategic pillars, compute technology leadership, data center focus, AI, across all their products, software, and semi-custom solutions, they've been incredibly consistent over the last decade. But it's the transformation itself that gives this new strategy so much weight.
That consistency has been their secret sauce, If you look at the historical context, specifically from, say, 2016 through their projected 2025 results, it's just a profound turnaround story.
It really is.
In 2016, AMD was doing about $4 billion in revenue.
$4 billion.
By the time they hit the end of 2025, they expect that number to reach $34 billion. That's a 26% CAGR over 9 years. They've multiplied the company's size by almost 10 times.
It's one thing to grow revenue, right? But it's a whole other thing to grow profitability right alongside it. And that's where the gross margin expansion is so impressive. They managed to push their gross margin from a low of, 31% in 2016, all the way to an expected 54% in 2025.
And that tells you they aren't just selling more stuff.
No.
They're gaining pricing power. They're shifting their product mix overwhelmingly toward premium, high-value segments.
And that shift is really just another name for the data center.
It is. That segment has been the primary engine. In 2020, the data center business was about $2 billion. By the close of 2025, it's estimated to be over $16 billion.
Wow.
That 50% plus growth rate has made the data center nearly half, 47% of AMD's entire business. That decision years ago to prioritize servers and data center infrastructure, that has absolutely defined their success.
A success that was built on just relentless execution. The EPYC processors, the Zen roadmap, they are foundational now.
Oh, yeah.
They're deployed in 10 out of the 10 largest global hyperscalers and used by over 60% of Fortune 100 companies. They earned that seat at the table.
They did. But the real driver of the next wave, the one we're talking about today, is the AI acceleration side of the data center. That's all driven by the Instinct MI series of GPUs.
Right.
The current MI300, the MI325, and the upcoming MI350, that whole series is ramping faster than any other product in AMD's history.
Just think about that for a second. A foundational AI product, often competing against a very established market leader, and it's achieving the fastest commercial adoption the company has ever seen. That's a huge signal.
And the validation is critical. They made a point to highlight that 7 out of the top 10 AI companies are now using AMD Instinct products. These aren't small labs. These are the companies on the bleeding edge, the ones defining the future of AI.
And their feedback, their massive commitment. That's what validates this entire future roadmap we're about to get into.
It is. And, this is a perfect moment to just step back for a second. We're about to dive into a lot of forward-looking statements. And as excited as we are about the tech, we need to provide some context.
Absolutely. We're here to help you understand the market and the technology, not to give you advice on where to put your money.
Exactly.
Investment decisions should always be informed by your own thorough research or by talking with a financial professional. We need to be crystal clear on that.
Yes. We want to remind you that all information and analysis discussed here are solely for market understanding and educational purposes, and they do not constitute investment advice. Investing involves risk, so please ensure you conduct sufficient due diligence or consult with a professional financial advisor before making any investment decisions.
Okay, disclaimer done. Let's tackle the most staggering figure of the whole FAD, the $1 trillion market size.
The big one.
The big one. And to put that in perspective, AMD's forecast for the AI TAM, it went from an initial estimate of $300 billion, then it was quickly revised to $500 billion by 2028, and now it stands at over $1 trillion by 2030. Why the dramatic, almost overnight acceleration?
The word they used over and over again was insatiable. Insatiable demand.
Right.
The sources suggest that the rate and the pace of AI infrastructure build-out is actually accelerating, not leveling off. The core belief held by Dr. Lisa Su and the executive team is that AI compute really equates to intelligence.
What does that mean exactly?
It means that if you have the balance sheet, and the hyperscalers certainly do, you are compelled to accelerate your investment to maintain or gain even incremental competitive intelligence.
That is a fundamentally different idea than what a lot of analysts held even 6 months ago. The thinking was a possible cooling off period was coming.
Right, that the initial build-out was done.
Yeah. But AMD is saying we are still in the very early innings of a massive exponential investment cycle.
And there are two major forces fueling this. The first, like we mentioned, is just the scaling speed of the core foundational model companies and the big hyperscalers. They're moving faster than anyone anticipated.
Okay, what's the second one?
The second accelerant is the rise of sovereign AI.
Sovereign AI.
And nation-scale deployments. Essentially, every major country and region is realizing that relying on foreign infrastructure for your AI compute is a huge geopolitical risk. So they are accelerating domestic infrastructure projects to ensure they have self-sufficiency. And that instantly adds massive funded capacity to the TAM.
Okay, now here's where this deep dive gets really insightful and kind of counterintuitive. The early industry story was that specialized AI chips, GPUs, would eventually cannibalize and replace general-purpose CPU workloads.
I remember that.
But AMD is seeing the exact opposite. They're saying CPU demand is accelerating because of AI deployment.
This reversal of fortune for the CPU is huge. I mean, it's huge for AMD, especially since they're the undisputed leader in server by 86 performance with EPYC.
So what does that mean in dollar terms?
They anticipate this shift alone will add about $30 billion to the CPU TAM by 2030. That's money that, might have otherwise been written off. And this growth is driven by four primary needs that a CPU just handles better or more cost-effectively than a GPU.
Okay, so let's unpack those four drivers because they really illustrate the complexity of this modern AI factory.
Let's do it. So the first driver is the head node, or orchestration.
The head node.
You need a high-frequency, high IPC, that's instructions per cycle CPU to manage these massive GPU clusters. Think of the GPU as the engine and the CPU as the highly precise transmission and throttle.
Okay, so it's the conductor of the orchestra.
Perfect analogy.
Yeah.
If the CPU isn't fast enough, if it doesn't have the clock speed and IPC to sync data, manage memory, and launch kernels really, really rapidly, then your enormously expensive GPUs just sit there idle, waiting for commands.
And AMD's next-gen EPYC chips like Turin, they're being specifically designed for this role, right?
Exactly. Optimized for that high-frequency, low-latency control plane job.
So the CPU isn't doing the heavy lifting, the matrix math, but it's critical for efficiency. What about the second driver, the AI pipeline?
The AI pipeline is so much more than just training models. It's the entire data lifecycle, and this is where we need to talk about things like RAG and ETL.
RAG and ETL. Let's define those.
Sure. RAG is Retrieval Augmented Generation. It's a system where a language model checks an external database for up-to-date facts before it answers a prompt, which makes it much more accurate.
Got it. And ETL.
ETL is extract, transform, load. It's the whole process of cleaning, structuring, and moving massive data sets around.
And these processes are super CPU intensive.
Exactly. Pre- and post-processing, the RAG queries, and especially ETL, plus new high-performance storage and database workloads, all of this happens on the general-purpose x86 CPU. As AI models ingest more real-world, messy enterprise data, they generate massive new back-end workloads that require ePYC processors. This kind of scalar workload is just not a good fit for a GPU.
Okay, the third driver relates to inferencing, which is the actual running of the model to get an answer.
Yeah.
Why haven't CPUs been completely pushed out here?
Because CPUs are still incredibly cost-effective for smaller models,
Yeah.
often called SLMs or small language models, and for mixed workload environments where you're running a bunch of different tasks on one server.
Right.
With AMD's density and high core counts, using those extra cycles for real-time inference is just highly efficient, especially for, domain-specific or edge applications that don't need trillion parameter scale.
And there's a specific technical advantage there, too.
There is, a key one. AMD's Zen 5 architecture includes a native 512-bit wide vector engine that's basically a specialized piece of hardware built right into the CPU that's designed for fast, efficient, general-purpose inference. It makes the CPU an outstanding inference engine for a huge number of commercial uses.
And finally, the fourth driver, agentic AI. This sounds kind of futuristic, but it's clearly driving demand right now.
Agentic AI is the move toward autonomous software agents acting inside enterprise systems. These agents perform complex, multi-step tasks, retrieving, processing, interacting with different applications and databases, all in real time.
So they're not just doing tensor math.
Not at all. They rely on scaly sequential logic and complex conditional processing, which runs best on a robust general-purpose CPU. As the world moves toward this autonomous enterprise, the demand for high-performance CPUs to manage this agent layer just accelerates.
So to sum up the $1 trillion vision, it's an AI factory, and every single component, GPUs, HBMs, CPUs, and the scale-up networking, is accelerating at the same time. It's totally comprehensive.
And critically, AMD's projection provides a competitive framework. They estimate that ASIC SO, application-specific integrated circuits, the custom hardware built by companies like Google or Amazon, will only make up about 20 to 25% of the total accelerator market.
Which leaves the vast majority of the demand for general-purpose, programmable GPUs.
Exactly. It leaves an enormous open field for AMD to go after and gain the meaningful double-digit market share they are targeting against their proprietary competitor.
Now we get to the core growth engine, the place where that 35% overall KGR turns into a 60+% revenue KGR for the data center business.
60+%.
And an absolutely breathtaking 80+% AI revenue KGR over the next 3 to 5 years. This requires technological miracles delivered on a clockwork schedule.
It absolutely requires miracles, and that's why they committed to an annual cadence for hardware development.
Right.
They recognize that the speed of AI innovation demands they compress what used to be a 2-year product cycle down to just 12 months. It's a massive execution risk, but it's necessary to keep customer trust and relevance.
If you miss a generation in this market,
You lose the customer for 3 or 4 years. It's that simple.
So let's start with the current focus, the MI350 series, which is ramping fast. What did this generation bring to the table?
The MI350 was all about efficiency and cost to serve. It introduced 4-bit compute, or FP4.
FP4.
Previously, AI often used 8-bit or 16-bit numbers. Moving to 4-bit means you can represent data using much less memory and do calculations much faster. You get less data movement, higher throughput.
And that gives hyperscalers a 10x benefit?
Up to a 10x cost to serve tokens benefit compared to the previous generation.
That shift to FP4 is critical for margins and profitability for their customers. But the focus is rapidly shifting to the MI450 series, right? That's the one securing these huge multi-generational deals.
The MI450, based on the new CDNA 5 architecture, is set to ramp in Q3 2026. This is the first chip that's really designed for the scale they're talking about. It packs up to 40 petaflops of peak FP4 compute. But what makes it truly astounding is the memory.
The memory.
432 gigabytes of HBM memory with 19.6 terabytes per second of bandwidth.
So why is 432 gigabytes so important?
Because memory capacity is the physical bottleneck for handling the next generation of AI models, specifically models that exceed 1 trillion parameters.
Yeah.
To train or even just efficiently run these massive frontier models, the model weights and all the necessary data have to fit entirely in the available high-bandwidth memory. A chip with 432 gigs can handle workloads that competing chips with less memory just physically cannot. It's an immediate, practical advantage for the most demanding customers, like OpenAI.
And beyond the MI450, they immediately gave customers a look at the MI500 series for 2027, just to confirm their confidence in that annual cadence.
Yep, the MI500 is described as the next big breakthrough in compute, memory, and networking. This continuous, aggressive, and highly transparent roadmap is absolutely essential.
Because customers need to see 3 or 4 generations ahead.
To justify committing multi-billion-dollar, multi-year infrastructure investments today, you have to.
And to make these massive chiplet designs work, the underlying plumbing, the interconnect and packaging technology is essential. It feels like the hidden gem of AMD's strategy.
It is the foundation. Mark Papermaster, their CTO, he highlighted that since the first EPYC chip, they've achieved a 30x increase in silicon availability in their designs.
30 times.
And that's largely through advanced packaging that lets them integrate multiple specialized chiplets into a single package. They're also introducing the 5th-gen Infinity fabric, which is optimized for efficiency and coherency across all these chiplets, making them all act as one.
And you need the high-speed signaling components to scale this out to thousands of GPUs.
Correct. They've prioritized owning and advancing their proprietary high-speed signaling tech, which they call Certus technology. This handles the massive data flow both within the chip and between processors.
And that's getting faster, too.
Much faster. They're moving from 112 Gbps per second now to 224 for the MI400 series. The roadmap goes toward 448. And that speed is critical because it necessitates an inevitable industry shift from copper interconnects to high-speed optical connections at the rack level. They're preparing for that massive infrastructure change right now.
All of this tech comes together in the Helios rack-scale solutions, which were co-developed with Meta. Why is rack-scale design the new unit of competition?
Because when you scale to thousands of chips, you stop selling individual cards. You start selling integrated, liquid-cooled data center racks that are optimized for a specific workload.
And Helios is built on open standards, which seems to be a core differentiator.
It is. It gives customers more flexibility and helps them avoid vendor lock-in, which is a key priority for hyperscalers like Meta. The acquisition of the ZT Systems design team was specifically to bring that rack-scale integration expertise in-house.
So let's break down the networking piece, which is split into 3 layers: scale across, scale up, and scale out.
The first is the front-end or scale-across network.
Mm-hmm.
This uses the Pensando DPU's data processing units that AMD acquired.
Right.
These are essential for offloading data prep, security, and storage tasks from the expensive main CPUs and GPUs. They use something called P4 programmability, which lets customers customize the network intelligence for high-performance offloads and features like end-to-end confidential computing. It basically makes the network smart.
Okay, next up is the scale-up fabric. This connects chips within a single rack, right? The most sensitive, lowest latency connection.
For this, they use the Ultra Accelerator Link, or UAL, protocol, which is packetized and run over Ethernet.
And that's a crucial distinction.
It is. Unlike proprietary interconnects, using packetized Ethernet gives customers flexibility and relies on open, proven technologies. This UAL approach delivers ultra-low latency while achieving 260 terabytes per second of bandwidth across a 72 GPU Helios pod. It lets dozens of GPUs function as a single, coherent supercomputer.
And finally, the scale-out fabric connecting vast numbers of these racks together.
Here, AMD is a committed leader in the Ultra Ethernet Consortium, or UEC. The UEC is the industry body developing the next-gen Ethernet for AI clusters. By leading it, AMD ensures their systems can link hundreds of thousands of GPUs efficiently using open standards. This commitment to open is their primary competitive differentiator against proprietary fabrics.
Shifting to software, because the hardware is just a house of cards without a strong ecosystem. ROCm, their compute platform, has historically been the biggest vulnerability for AMD. The sources suggest there's been undeniable progress. How significant is this shift?
The progress is real, and you can quantify it. ROCm downloads increased 10 times year over year.
10x.
They now support all 2 million models on Hugging Face and the top 10 AI frameworks. The strategy is built on open source, leveraging rising abstraction layers like PyTorch and Triton. This makes it much easier for developers to port their workloads over.
But the CUDA moat is famously deep. Is AMD really closing the gap or just gaining baseline functionality?
I think they're closing the gap by focusing on the open source community and, fascinatingly, using AI to fight the software battle. Vamsi Bopanna, who heads up AI engineering, he mentioned that their engineers are using AI to write GPU kernels.
So using AI to write the software for the AI chips.
Exactly, and he said the results are shockingly better than anything human engineers could manually optimize. This dramatically reduces the adoption barriers and ensures the platform is always performing at its peak.
The ultimate proof of the strategy lies in the partnerships. Let's talk about the OpenAI deal. I mean, the scale of 6 gigawatts is truly hard to grasp.
It signifies complete validation of their multi-generational roadmap. This multi-year deal with OpenAI, focusing on the MI450 series ramping in the second half of 2026, is structured around delivering 6 gigawatts of compute capacity.
So put 6 gigawatts in perspective for us.
It's the continuous power consumption equivalent of a major metropolitan area, or several large nuclear power plants. Committing to a volume of that size validates everything: their production scaling, the MI450's performance, and the trustworthiness of their open ecosystem.
And they also solidified partnerships with traditional cloud providers.
Yes. The expanded partnership with Oracle is key. Oracle will be one of the first to offer public MI450 instances when they ramp in Q3 2026. This focus on minimizing that time to cloud gap is vital for adoption.
Right.
And of course, the deep collaboration with Meta on the Helios rack design just underscores their commitment to providing open, production-ready systems at hyperscale. These partnerships are how they go from just targeting market share to actually achieving tens of billions of dollars in AI revenue by 2027.
So the data center is the engine, but AMD's projection of over 35% revenue CAGR, that requires the entire ship to be moving forward.
The whole business has to fire.
Their core businesses, client, gaming, and embedded, are essential and are collectively targeting a very respectable 10+% revenue CAGR. And that's significantly ahead of what the broader PC or embedded markets are doing today.
The client and gaming group has shown really strong momentum, reversing years of relative weakness. They've managed to double their revenue in 2 years, hitting over $14 billion and achieving a record 28% client revenue share.
And that's because they made that strategic decision to get out of the low-end volume market and focus on premium, gaming, and enterprise.
It really paid off, and the success in enterprise is quantifiable. Over 50% of Fortune 100 companies have deployed Ryzen PCs. But looking forward, the real driver here is the AI PC inflection.
The AI PC, AMD sees this as a once-in-a-generation shift, not just another product cycle.
They do. They anticipate AI PC, so devices with specialized neural processing units, or NPUs, for local AI tasks, will surpass 1 billion end-user devices over the next several years. This isn't just a marketing term, it's a fundamental architectural change.
What justifies that scale, though? It has to be driven by experiences that you, the user, actually value.
Exactly. The local NPU unlocks a few critical things. First, confidential personal AI assistants that run entirely on your device. That ensures privacy and low latency.
Big for enterprise.
Huge. Second, big improvements in gaming through AI upscaling like FSR4. And third, low latency task automation things like real-time summarization or enhanced video collaboration that don't rely on the cloud.
And the roadmap reflects this. The upcoming Gorgon and Medusa processors are promising, what, a 10x AI performance gain?
Up to a 10x gain since 2024. That's the leap that truly separates the current generation from the AI PC generation.
So their target here is aggressive. A clear path to over 40% client revenue market share in the next 3 to 5 years.
It is. Now let's turn to embedded and adaptive computing, which is the high-margin stability driver. This segment is basically the successful integration of the G-Links technology. They've secured over $50 billion in design wins since 2022. That's a 21% CAGR. And this success has allowed them to expand their very lucrative semi-custom business dramatically.
And this is a crucial distinction. Semi-custom is no longer just console chips.
Not at all. The core of the segment now is diversification. They have over $45 billion in new semi-custom design win content, ramping from 2026 and beyond.
And this is leveraging their modular IP.
It is. They're mixing and matching FPGAs, x86 CPUs, GPUs, and DPUs to create custom silicon for strategic customers in areas like aerospace and defense, advanced automotive, and data center networking and storage.
And they identified a powerful new growth vector here: physical AI.
Physical AI is intelligence moving from the cloud to the physical world.
So autonomous driving, robotics, drones, smart factories.
All of that. And what makes AMD uniquely positioned here is their adaptive computing foundation. Physical AI requires a pipeline, perception, which is sensor processing, decision, which is low latency inference, and action, which is real-time control.
And they can do that whole pipeline on one chip.
They're one of the few companies that can optimize that entire pipeline on a single embedded platform using their modular components. And that single platform approach is a huge differentiator in areas that demand functional safety and guaranteed real-time performance.
So given this expansion, they're aiming high here as well, to exceed 70% embedded adaptive revenue market share over the next 3 to 5 years.
It shows that even in the segments not defined by AI, they are projecting market dominance.
Okay, we've covered the data center targeting 60+% growth, and the core business is targeting 10+% growth. Let's bring this all together, down to the bottom line. The aggressive long-term financial model.
This is where the confidence turns into hard targets.
It does.
So this consolidation of growth leads to the three main financial targets for that 3 to 5 year time frame. Number 1, total revenue CAGR of greater than 35%.
Okay.
Number 2, non-GAAP operating margin of greater than 35%. And number 3, non-GAAP earnings per share, or EPS, exceeding $20.
That $20+ EPS target, that requires not just massive revenue growth, but significant operating leverage and sustained profitability. And that's captured by their gross margin target of 55 to 58%.
And this margin expansion is based on three pretty predictable tailwinds. First is just scale and manufacturing optimization.
Sure.
Second is moving up the stack in the client business, higher average selling prices, or ASPs, which significantly improves that segment's gross margin. And third is the sustained growth of the high margin embedded in FPGA business, which always operates well above the corporate average.
But there's a complexity here that needs some nuance. The AI data center GPU business, the one driving the 80% CAGR, presents a unique margin dynamic.
It does. AMD acknowledged that the data center AI gross margin is initially tracking slightly below the corporate average.
Which sounds concerning on the surface.
It does, but the strategy is sound. Their priority right now is not percentage margin, but maximizing gross profit dollars and gaining market share as fast as possible.
Right. Land and expand.
Exactly. In a fast-growing, emerging market, volume and customer adoption are everything. They project that the AI margin will steadily improve over time through scale, optimization, and better design for cost as the tech matures.
And that operating margin target of over 35%, that assumes impressive operating leverage. They're committing to aggressive R&D, but they expect revenue growth to significantly outpace their spending growth.
This brings us to a critical area for skepticism: execution risk. The company stressed rigorous return on investment scrutiny. They are highly disciplined about organic R&D and are not afraid to kill projects if they fail to meet internal return expectations.
And this applies to acquisitions, too.
Yes, like the acquisition of the ZT Systems design team for rack integration while divesting the manufacturing operation. That generates immediate cash while adding a critical high-value capability.
This disciplined approach is reflected in their capital allocation strategy.
They view their strong balance sheet and massive free cash flow, which they expect to more than double in 2025, as a strategic asset. While the main use of cash is R&D to fuel growth, they remain committed to returning cash to shareholders.
They've returned, what, $8.6 billion through buybacks since 2021?
They have. It demonstrates confidence in the self-funding, compounding nature of their business model.
We should also address the most obvious external risk: supply chain. Given this massive ramp, wafers, advanced nodes, HBM, everything is getting tight across the industry. Did they acknowledge this challenge?
They did. They called it the primary external constraint. However, they expressed confidence in their ability to meet the forecast, citing deep experience in adopting advanced nodes and their advanced planning for HBM supply.
So they think the industry can scale with them.
Their belief is that the industry historically manages to ramp supply when the demand signals, like a $1 trillion TAM forecast, are clear, massive, and validated by multi-year customer commitments. The challenge isn't demand, it's scaling supply quickly enough to match that insatiable demand thesis.
Finally, let's quickly define that key financial term we've used throughout. Non-GAAP EPS.
Sure. Non-GAAP, or non-generally accepted accounting principles, is a standard way that tech companies present earnings. When AMD talks about a $20+ non-GAAP EPS, they're referring to earnings adjusted for specific large non-cash expenses.
Like stock-based compensation.
Exactly. Stock-based compensation, the amortization of intangible assets from acquisitions like C-Links, and other one-time costs. It provides a clearer picture of the operational performance of the core ongoing business, which is why analysts generally focus on it.
So this deep dive really shows AMD executing a fundamental shift. They're leveraging technological disruption chiplets, advanced packaging, open standards to move from a high-performance challenger to a projected market leader in this rapidly expanding AI-driven environment.
The underlying message is one of strategic confidence and massive scale. I mean, if AMD hits these targets, they will redefine their position in the tech landscape. Let's just reinforce the three most important numbers that define their future vision.
Let's do it.
1. Greater than 35% revenue CAGR. That establishes best-in-class, consistent growth.
2.
Greater than 35% non-GAAP operating margin. This shows that aggressive growth is translating into strong profitability and operating leverage.
And 3.
And 3, greater than $20 non-GAAP EPS target, projecting significant shareholder returns derived from all that operational success.
And the most important strategic takeaway from the FAD for me was that the $1 trillion TAM isn't just driven by GPUs, it's fueled by the critical, surprising, and simultaneous acceleration of general-purpose CPU demand.
Right. The entire AI factory requires ePYC for orchestration, data management, and agentic AI, collaborating with Instinct for the raw compute.
It's a symbiotic relationship.
It is. And this focus raises our final provocative thought for you to consider. AMD's strategy is explicitly hinged on an open, collaborative approach, co-developing Helios with Meta, forging multi-generational deals with OpenAI, and pushing open standards like UEC and ROCm. This is all designed to counteract the proprietary, tightly integrated ecosystems of their primary competitor.
So what's the question?
The question is, in the long run, as customers commit multi-gigawatts of capacity to AMD's open ecosystem, will this collaborative approach foster better long-term innovation and faster agility than the proprietary walled garden approach? It suggests the battle for AI dominance is now won not just on performance, but on customer trust and the ability to partner at unparalleled scale.
자, 조 GNT. 원 왠지 락제. 주황 이지 웬토.